Righto, buddy miners. Nothing better than having a dingo with Dingo.
What a pleasure to be
Oh,
here.
the
Thanks,
bloody
mate.
the dingo has been. Cobber. That's bloody the dingo has been let out of the Nero Resource Fund cage, and fucking we've finally got you on, Cobber.
Thanks for having me, mate. It's an absolute pleasure to be here.
We thought we'd ease you in with a man that has bulk amounts of experience in the podcasting studio, Mr. Samuel Berridge from Perennial, what is it, Value Management.
Yeah, that's the
Bloody
one, mate.
sounds flash, mate.
Well, it's all about the polish. You guys know more about marketing than I do.
Mate, welcome back, boys. Bloody Jade, we've got Trav sitting in the lurking over there, and we are going to inject him at an appropriate time that I deem fit. And that will be hopefully if you can say something that agitates him, that he really disagrees with, anything about blockchain, and something about, maybe that was good corporate governance when it mightn't have been. That might be a bloody sub-in. JD, mate, you're the man that excels at preparation.
I've done no prep here. These guys don't need any introduction. So why don't we rip straight in? There's a commodity or kind of group of commodities we don't speak too much about. But Sammy, you've posted a bit about recently, and that's bauxite, alumina, aluminium. And I know you hold a bit of Metro, have been on a bit of a run lately. They've recapitalised the business. They were highly leveraged in, on the operations and the financial aspect. How are things shaping up, and how are you seeing the bauxite market more broadly at the minute? It's getting a bit of love.
Yeah, and it's been a pretty steady grind higher. So, I mean, one of the good things about the bauxite market is that you don't have any financial players, flapping about there like you do in oil and copper and things like that. So the price you get is more reflective of supply and demand, and usually that means less volatility and sort of hopefully a steadier price trajectory, which for the last 18 months has been up, which is great.
In the background as well, we've got the deal for Alumina, the company getting taken out. They've sort of doubled since the bid got slung 6 months ago or so now.
Yeah, no, it's looking good. I think, Alcoa's script keeps on going up, and so they're joined together.
What does that sort of? I mean, that tie-up seemed like it was just a matter of time, kind of, given the interconnected shareholdings and the ownerships they had together. But does that sort of speak to a bit more consolidation going on in that neck of the woods more broadly?
I'm not sure. I don't have any great insights as to why now. I mean, it could have been at any time over the last 10 years or so. You could speculate that they foresaw this tightening of the alumina and aluminium markets, or maybe they were, saw that Kwinana was coming to the end of its life and they, wanted to manage the rehab of that in-house rather than having the additional disclosure that you have with a listed company, sort of similar to Rio and ERA, trying to look mop up that the Ranger uranium mine up there.
Not if Willie Packer has anything to say about that one.
Yeah, well, we'll see.
And there was another sort of quirky aspect in the aluminium market. I saw Trafigura a week or so ago. They were trying to talk down the market, acting all bearish. I'm not sure if you picked up on this, but the sort of role in the role that the commodity traders have in the market, is that something you looked into at all?
Yeah, how's this? He reckons he hasn't done any research or preparation for the chat.
Sounds like he's done.
I'd never thought I'd be talking about aluminium or bauxite in my whole life. Mate, we're in.
Well, Trav will know. It's actually picked up a real following on Twitter. They're the bauxite boys, aren't they, Trav?
The bauxite. You in bauxite and aluminium, Dingo?
I quite like the bauxite thematic as well. I'm very much here to support Sammy on that one.
Oh, geez, aren't you just such a philanthropist?
No, there's no interest like self-interest.
Yeah. And I think, the fascinating thing about it is that if you work through aluminium, alumina, all the way back to bauxite, at those downstream stages, there's various dynamics, and financial players are one of them, capacity constraints are others. The amount of investment that is arguably going into different parts of those supply chain. If you weave it all the way back to bauxite, you've got a great setup in terms of the raw material. So you've got China's production is diminishing. They're having to go to Guinea to get that supply. That's a semi-complicated from a jurisdictional point of view, and then the next largest supplier is Australia. And so groups like Metro are really coming into the fore and coming into a really healthy part of their operation at the right time in the market cycle.
So give us a scope on the scale of it. So are the two big players in Australia, South 32, Alcoa?
Rio?
And Rio.
And Rio. Which one's Rio's one?
They've got a bunch of Weeper's the big export facility, but I think that's coming towards the end of its life now. I think they're going to start using more of their bauxite internally, so less for the export market.
Yeah, and so if you got those three big players up the top, where's Metro sitting? In terms of scale?
On the way to 7 million tonnes per annum, isn't it?
That's right.
So I think Rio at their peak were doing around about 30.
Yeah.
For contrast. Yeah.
Yeah.
And is it a notoriously a tough industry? Like, how would you, what's it like, barriers to entry and CapEx requirements? Is it because it sounds a bit niche?
At the bauxite level, there's often been a lot of integration. So a lot of the alumina producers have their own bauxite production. So that's what you've seen here with AWC and Alcoa in Western Australia. Most of their bauxite production is integrated. A lot of that is similar with the Chinese producers. However, there is still a portion of that market that needs to be serviced. And that's what you get from these more merchant producers like Metro. And free supply of bauxite is reducing.
And getting cheap energy is a key component for the ones that want to be integrated, right?
Yeah, that's right. Yeah.
So we sort of saw, I think half a year ago, when one of the alumina plants got called off, that was 5% of WA's gas, domestic or local gas.
Yeah, it was
use.
chunky.
It's pretty phenomenal, just the one Kwinana plant getting shut down.
Yeah, and it's a longer term positive, but this is a real challenge, not just for aluminium, although it's acute in aluminium because it does require so much power. But just the other week, China announced a whole pile of restrictions on emissions from its minerals processing industry. So aluminium's had a capacity cap of 46 million tonnes per annum for a while now, but that's been expanded to copper and nickel and other mineral processing enterprises. And that's important because for the last 20 years or so, the West has slowly been outsourcing its mineral processing to China because it's dirty and is expensive, and China had bucket loads of cheap coal, and they're also very good at it, like metallurgically, like they invented nickel pig iron. It's something they are very good at. However, now if they've just said we're not producing anymore or we're not building any more capacity, the West is going to have to come to terms with building that themselves again. So instead of shutting down refineries, shutting down smelters, we're going to have to start building them. And then, you need the power to do that. Well, what sort of power is that going to be, and how much is it going to cost? Like these are very difficult hurdles to overcome if the West starts to need to produce more of its own metal. And more than likely, that's going to go at the top of the cost curve, which means the price for the whole lot needs to go up to accommodate that. Yeah,
it's fascinating. I saw just an hour or two ago some talk that the Indonesians were potentially going to put some caps on. I didn't have time to go too deep into it. I'm not sure if you guys saw it, but Nickel Industries came off 10% on the day, sort of counter to the big narrative that we'd seen over the last few years of the nickel just coming out of Indonesia. Had you guys seen this one?
Yeah. I reckon Dingo would have been all over that. Ding, ding, ding. Maybe that's the bloody, the howl is your ding, ding, ding.
Yeah. The call. The calling card.
You've ventured up there, haven't you?
You've been there.
I've been up there, yes. No, and would recommend that anyone in the industry who is able to, or even, as Sammy says, from both sides of government, to get up there and see what they have achieved in terms of the Indonesian nickel rollout and how difficult that is going to be to compete with.
And this is, I've been wanting to ask someone about this, and I've got a feeling since you've had the boots on the ground, Dingo, you might be the man, because we are the narrative out there is that Sulawesi Island is just getting fucking destroyed, shit going in the water, and that is Indonesian nickel. But there's the other perspective of, as you talk about nickel industries and wanting to know if there are how many others that aren't operating at that standard in nickel laterites in Indonesia. So, what's the go, mate?
Yeah, I think this is a common misconception, to be honest, and I think it's very easy, and we do this a lot, I think in the West more broadly, just to say, oh, they're cheating, or they're doing it worse than us, or they're taking environmental shortcuts, so that's why it's cheaper. I think that's why I would recommend that people get boots on the ground up there, particularly to the IMIP facility where Nickel Industries are based with Tsingshan. That is an absolutely phenomenal piece of engineering, and it's taken a huge vision, I think, to bring it all together. From an environmental perspective, from what we could see, they're actually conducting themselves in a very good manner. So you don't have all this runoff of sediments into the ocean. There are these sediment ponds that capture that from the mine. You have this enormous level of industrial integration that allows for, I suppose, engineering solutions to things that can be difficult from an environmental perspective. So, you know, that they'll strip the sulfur from the emissions that come from the power plants. They'll then use that to put back into an acid plant to produce sulfuric acid. That produces a whole lot of heat. That heat gets pumped into the HPAL plant, and effectively you then have, you know, nickel coming out at a very, very attractive and competitive carbon intensity at the lowest point in the cost curve.
Because it's so fucking big as well.
Yeah, absolutely.
It helps with the
it's
carbon
fucking
intensity.
huge.
Yeah,
you know?
right. And so, and if that's the Nickel Industries operations, considering the whole bloody field of how much nickel's coming out of Indonesia, how much are there other operations operating at that, you'd say, Western standard a bit?
Certainly everyone integrating within the IMIP, because that's a organised facility. Effectively, Tsingshan run the whole thing.
Yeah.
And there's, you know, the number escapes me, but I think there's multiple tens of JVs in that whole facility. It's 5,500 hectares. It's, you know,
Jesus
it's enormous
Christ.
and growing.
You
So
can run
that,
like 6,000 cattle on that.
well, they run, you'll like this, they run 10,000 Smackman trucks. Just one singular type of truck through the whole facility. So, and again, going to competitiveness, that's one set of spares, one set of maintenance, one set of rollout, and it's incredibly impressive. So, yeah, I think it's easy for us to want to think and want them to be cheating. But at the end of the day, I think they've achieved some pretty phenomenal engineering feats up there. And as Sammy pointed out, they're at the forefront of the technology. So they've been advancing this for a long, long period of time. And that's the challenge that we have here in Australia now and globally, is rethinking about how do we get economically competitive, okay? And let's continue to value doing things in a better way. Now, whether that be focus on the environment or your social license to operate or whatever it is, but let's not lose sight of also being competitive. Otherwise, we'll just get pushed out. And I think that's arguably what you've seen in the nickel sector.
So if you can, so I'm pretty sure you're going to get hate mail from BHP, Wailu, IGO, Panoramic, fucking everyone from saying this. But if you couple that potential bloody standard of practice that is commencing in Indonesia with the fact they can convert the class 2 into class 1, it just sounds like that really firms up Indonesia's position as being a really freaking long-term stable player in nickel and potentially squashing the rest of it unless there's a bifurcated pricing stream. But why would it be bifurcated if it's operating at that standard?
Well, that's right. And I think, look, interestingly enough, Nickel Industries are going through a process now. I think they're public about this on their offtake for the E&C. So, you know, let's see, is that an Asian party that picks that up? Is it a Western party? At the end of the day, I think the Indonesian nickel has now gone to 50, 60% of the market, probably continues to grow to somewhere to 70% on the latest numbers I've seen. So, in essence, Western autos or Western consumers of nickel are going to have to go there. And they're going to be holding these guys to a high standard. So in many ways, that would be a highly validating outcome.
And the other question to ask is, you sort of say their policy people, you know, people on either side of the aisle should go and see this thing as well. Are we spending our money appropriately in Australia, picking winners, giving money to Eneabba and these sorts of things? Or is infrastructure, industrial parks, these sorts of things, the way we should be allocating capital as a country, right?
Yeah, I think it's a great question. I think it's the right question to be asking ourselves here today. In my mind, the role of government in capital allocation is not to pick winners And I'm a big believer in the free market. That's what the market's there to do. And in Australia, if we're just sticking with resources for the moment, we have the deepest, most liquid market globally, I think, for resources and mining and energy. So there's plenty of capital there to bring these projects on. The role of government, I think, is to enable that, to enable us and enable business to operate in a competitive landscape. And if they could do that, and to your point, I think that is around investing in big infrastructure and creating industrial symbiosis and making the permitting quick, easy, simple, and building out these big industrial facilities, right, similar to IMIP, which is why I encourage members of our government to go up there and see it, and then feed into that, energy policy, etc., which Sam was touching on before, and create a competitively or an economically competitive space for business to operate. Then the capital market will fund projects that might not otherwise have been competitive. That's kind of the point of the market. There's plenty of private capital out there that's willing to stand beside government on both the infrastructure and the next piece, the investment into business. So, yeah, my view would be it's not the role of government to pick winners.
What is the life of that facility at the moment? Like, how many decades?
As in, how long has it been around, or how?
No, going to be around.
That's a good question. Multiple decades from here, absolutely.
Yeah.
And I think one point to note in nickel, why it works, is the quality of the ore bodies there. I think it starts at the geology, right? And they're just 20 kilometres down the road. So if you integrate that infrastructure piece with good ore bodies, you get these super competitive outcomes. And in Western Australia, we have some of the best ore bodies globally across multiple commodities. I mean, that's such an incredible blessing. And so we shouldn't be shooting ourselves in the foot by destroying the competitiveness of our industry, whether it be via energy policies or poor investment or getting too ideological in how we think about these things.
Who would have thought a politician would get ideological?
He might be running for party. Mate, you vote one.
Vote one, Dingo.
For the WA Liberal Party.
Sammy, you've posted some thoughts about energy policy recently as well. Keen to hear your thoughts on, to start with WA gas. There's been this export debate for a while now. Where's that sort of tracking to start with?
Oh, it's very hard to pick which way the Premier is going to go. I mean, there was sort of all sorts of, winks and nudges, and even some gas consumers or large gas consumers were of the view that domestic gas was going to be available for export more broadly. And then a week later, the Premier came out in the West Australian and said, "Oh, look, no, we're leaning back the other way. That we're not going to allow exports of gas domestically." I think ultimately, the domestic gas price in WA is hovering around sort of $8.50, $9 at the moment. The cost of production from conventional onshore gas, depending on the quality of field, is $2 and below. So there is a decent margin there. And whilst I completely acknowledge, and we even have exposure to a few of the companies that are sort of arguing for for exports to be approved. Yeah, you've got to weigh up the greater, national interest in doing that. You'd want to have some very firm mechanisms in place to ensure that you don't have, the case on the eastern states where they're, running out of gas and due to the sort of the export industry. But I should sort of almost recount that. But largely their problem is that they built these big export facilities and then they refused to permit any gas projects for 10, 15 years, and lo and behold, it's running out. But you got to look after the sort of the state that you're in. You don't want gas prices going to sort of $10, $12, $15 here, because it's just absolutely ruinous for industry, but not just industry. It feeds into inflation, and that feeds into how much interest you're paying on your mortgage. So it really screws you over if your energy prices get out of hand.
Does a change in policy only come once that happens, though? Is that the only way for people to actually realise what's happening out there?
Yeah, I think you might be right. It's going to be fascinating to see what happens at the federal level in the next election. I believe the reason you're sort of starting to see the tide turning, perceptions of gas as a means of generation are improving based on survey results in the AFR and elsewhere, and that's only happening because people realise that when you start messing around with the grid and start running out of supply of some of these key energy inputs, it forces prices up, and people don't like it. They're not really prepared to pay for it. We were promised that the renewable transition was going to lower power prices, and the exact opposite has happened. And all of a sudden, so people start asking questions. Well, is the modelling right, or is the actual that shows up in your power bill more correct? Well, people will take an actual over a forecast any day of the week, and rightly so.
Gas is such a media and politically controlled thing that we probably don't talk about as much as we should in terms of between Gina, Chris Ellison, Kerry Stokes. It influences what's in the paper on the West Coast here, and it's been a bit in this week about Gina potentially looking at strike, and then you've got Kerry Stokes and Beach. You got Carnarvon, which an unmulleted Russell Delroy is apparently on the board of. Can't believe what the worst photo in history. I might bring that one up right now. What is bloody overarching look of what do you reckon's going to happen? What's the permutations of some outcomes in the WA gas market? M&A.
I think, if exports are allowed, I think that will certainly trigger a wave of consolidation.
Is that what they're waiting on?
I think, it's a big, it makes a bit of a difference to those projects.
Yeah.
You can build a bigger project. It becomes, your payback period's probably decreased overall through achieving higher prices. I think that's what a lot of people are waiting for. The mining industry, like any other industry, just wants stability. And whilst you've got these goalposts moving a little bit, people aren't quite sure where they're going to land. Once we have a framework that either rules in or rules out exports, well, all right, now we can start to assess cost and value, and therefore transactions probably happen thereafter.
And what would consolidation look like? What is a version of it? Gina buying Strike, Minres getting involved, what would that look like?
Hard to pick. Strike.
What are you betting on, Sammy?
Strike's an obvious one. That'll go. Gina and Chris might end up fighting over it again, like they're doing in the lithium, some of the lithium punts. But ultimately, I think Beach and Mitsui would want to be involved in some case. They've already got that Waitsia facility sort of mostly built. It would certainly make sense to or conceptually expand that a little bit more and sort of have some consolidation and sharing of infrastructure, sort of the exact opposite of what you've got in Gladstone in Queensland, where everybody went and built their own LNG plant and we're competing with each other for workforce, etc. But who ends up being the king of it all? It's hard to say. I suppose whoever wants it most.
And so how much is the onshore gas? How big is that? Educate me a bit here. How big of a market's that compared to all the offshore stuff?
It's tiny. It's tiny.
It's not it's nothing compared to. We're not talking Woodside, Santos sort of stuff here, are we?
No. The domestic gas industry is much smaller than the LNG export industry, but it is very, very important to West Australians.
And the beauty of the Perth Basin is that you've got a variety of groups there now, whatever iteration it takes, that consolidation, that can participate, right? They've got access to capital, big pockets. They've all got various industrial means and uses for that gas. So if, and this is something that, is maybe a challenge in capital markets, but also the opportunity why small companies can exist. If you do the hard work, if you roll this up and you create a champion of the Perth Basin, which, is still likely probably to be a multi-TCF basin, there's no reason why that's not attractive to a Santos or a Woodside. Right? It's material, and then, yes, they probably want much more stability of policy to be able to make a sort of big material M&A like that. Some of the more nimble guys, I think they can act on value, and that's sort of the way we've always looked at oil and gas and specifically that basin. If you're buying the molecules at the right price, somebody else will eventually come and take them off your hand because there's such an awesome use case for it. And in oil and gas, Perth Basin specifically, it's often just been about one moving and then the others kind of come because they all can see and have value for it. So you never know, mate. The big picture is that maybe it does go to the Great Woodside.
Yeah, right.
There's a few things to play out first.
Yeah, so if Gina and Chris are trying to get involved and fight over it, are they more leveraged towards supplying the gas for their own operations as more of a benefit for them, or do they see more value in potentially exporting, or a bit of both?
I think it's a really good question because, under the safeguard mechanism, the big miners are required to reduce their emissions by 5% per annum from, I think it starts 2028 or something like that. And a key way of doing that would be to replace the diesel in trucks with gas. And I think
the old AU Falcon taxis that used to be the gas ones.
Yeah,
mate,
exactly right.
AU trucks. Yeah.
The demand for gas in replacing diesel, like I don't know how much diesel the entire Pilbara consumes, but it'd be in the hundreds of millions of litres a year. That's going to require a lot of gas. And being it's a legislated requirement to reduce those emissions, that makes things a little bit complicated for the WA government because arguably, these guys who own the gas fields could say, well, hang on, we need all this ourselves. And we need an avenue to export to justify, building the bigger plant above and beyond what we're going to consume ourselves. And I think that was, their own energy requirements, coupled with their emission requirements is probably part of the reason why, the big Chris and Gina moved on the sector in the first place.
I'd noticed in the past day alone, 2 articles that really stood out. One was that New Zealand had backtracked on offshore oil and gas exploration, and also the Japanese conglomerate Itochi had kicked down the road the divestment of their thermal coal assets in Australia. Are you guys noticing a sort of changing from that 2020, 2021 period of sort of peak ESG, if you like, where companies are pushing these down, and then it's sort of like a bit of a floodgate once the first few majors kind of do it? If they can get the government on their side. Are you guys seeing signs of that sort of thing?
Yeah, definitely. I think it was the head of the IEA, if I've forgotten what his name is, it's like Fatty Birrell or something like that, came out in 2020 and said, there can be no new investment in oil and gas if we're going to meet our emission requirements. For somebody who's meant to be energy literate to say something like that is just completely dumbfounding and stupid because it completely overlooks the natural decline of these assets. If you stop spending money on them, they'll run out by themselves and they'll run out pretty quickly. I think the global average decline rate is around 7 or 8% per annum. And if you compare that decline to what even the most optimistic emission reduction scenario, the decline of oil and gas at 7 or 8% per annum is much, much faster. So that means that if you stopped investment dead back in 2020, you're going to have deficits. And we're starting to see those deficits now, particularly on the east coast of WA, but elsewhere, like in New Zealand. And so the folly of that attitude is being realised and reversed.
Yeah, and I think if you take a step back and think about potentially why is this happening, at the end of the day, renewables haven't been cheaper. So the rollout of renewables has not made anybody's power prices go down. And to Sam's point, I think we've failed to continue to invest into traditional energy sources to give us the security and support redundancy that we need in order to even bring these technologies into the grid, right? So let alone turning taps off before you turn taps on, which is what you're seeing on the East Coast, right? A lack of investment over a long period of time has led to a reduction in supply, which is now leading to really high prices. And that's a market mechanism. That's the market trying to send a signal that we need more supply. Couple that with the fact that we have a view that economic progress or economic activity, if you like, is simply a function of energy and how reliable that is and how cheap that is. And I hold a personal view that there's nobody in the world that doesn't want to see their standard of living improve. And, you look to developing emerging markets, you look to ASEAN now, you've got arguably the largest proportion of the global population ever that's sitting in this sort of, sort of income to GDP bracket where you start to see the desire for energy grow. And those guys are looking for the most economically competitive form of energy. So global energy demand is going to continue to grow. Even though we might want to transition the energy sector, energy itself, we want more of it. And yet, we've sort of been through a period where we've really stifled investment, where ESG policy has stifled investment. And I'm not saying that we're not intelligent enough or we shouldn't apply that intelligence to improve our energy sector, right, and transition it. By all means, bring on more energy. Sounds great to me, because that's going to help continue to grow economic development. And I think that's what you're seeing in some of these countries now, where the cost of energy is simply too high and people are pushing back.
Lads, the cost of water is too high as well if you don't have it. So that is why WA Water Boards is getting jammed down everyone's throat by us. You want to find water in WA, lads? Do you? Do you want to find water? Do you want to find water, JD?
I sure do, and there's only one person I want to do it for me.
Fucking Jero James.
Jero
James and WA Water Boards. So, mate, exploring for it, drilling into it, setting up the bore fields, pumping the bloody shit out. The Goldfields Paleo Channel specialists, they will drill through absolute shit and it will work. Holy snap and duck shit they can drill through pus. So, mate, no one else to call. WA Water Boards. Let's get back into it.
I mean, one of the ways that baseload energy is going to be brought on in these countries is nuclear, and it's not in Australia in a big way yet.
Although fucking dead by then, Jay.
Yeah, there's a bit of conviction in that call.
The debate has started in Australia, but these countries, China, they're talking about building 150 reactors throughout. Across the world, there's a increasing demand, and action is actually happening. I mean, you look in the UAE, and a quarter of their electricity now comes from Korean-built reactors. So you're starting to see it change. And Sammy, we spoke about nuclear 6 or 7 months ago, and that was on your two-pronged attack. You had gold and you had nuclear, and it's gone pretty well. One of the ways in which you were playing it at the time was going into physical, moving out of Paladin because the equities had gotten a bit rich. How are you seeing the nuclear space a bit more broadly to start?
Oh man, starting broadly, I think we're just at the beginning of a second nuclear renaissance. You see, Bill Gates broke ground on his reactor with TerraPower.
TerraPower, sorry.
Yeah, like the way I look at it and sort of got conviction, and this is sort of not a near term thing. It's a longer term thematic. But after Chernobyl, civilian research in nuclear reactors started grinding to a halt for obvious reasons, and then Fukushima almost put the nail in the coffin. Whereas research in nuclear reactors in the military space, that kept on going unimpeded. And the reactors that they've got now in the back of the Virginia-class subs, which Australia's trying to buy, are absolutely amazing. There's this one called the S9G reactor, pumps out about 210 megawatts. It only needs to be refueled, or it sort of runs its entire life of the sub on its initial fuel load, which is 33 years. And the whole sub there costs $4.5 billion US, as far as I'm aware. So, I mean, I'm not sure what proportion of that is the reactor, but it's not like the rest of the subs cheap. It's a pretty complicated kit there. So if you start running some numbers on what their cost of production is, per kilowatt hour or whatever your metric you choose is, it just looks extraordinarily cheap. And the civilian space will catch up, powered by AI, powered by our big tech firms who will just have a uninsatiable thirst for power as they try and set up more and more data centers. They will catch up to that tech, and it'll go past anything that we've got available today. It'll blow renewables out of the water. It takes up such a small footprint, so it's not really Australia's choice whether or not we go down this path. If the rest of the world does, we will have to follow, because if we don't, we're going to be uncompetitive.
But how do you think in terms of the timing? Because at the moment, a lot of countries are going ahead with it, or buying heaps of getting reactors built. When we, if ever, fucking flick the switch to say, right, we're going nuclear, but every other bastard's building reactors as well, the delay in actually getting them because there is a supply chain for nuclear reactors. Do you think there's a risk that the country might fall behind even further?
Oh, 100%. It'd be just like the COVID vaccine. There was no sense of urgency there, and we had to wait for that as well while everybody else got their share. So, yeah, definitely. There is a risk of delay. building up the workforce and supply chains and all that sort of stuff is very important, and everybody else moves before we do. On the one hand, there will be benefits in that the global nuclear supply chain will get bigger and cheaper and more efficient, and so that'll help. But the actual expertise in building these things, there will be a queue. I just think it's ridiculous that we aren't allowed to participate in this next wave of nuclear generation. I mean, whether we end up building one here or not, that's an issue for way down in the future. But just get rid of the ban and let the new tech that's evolving overseas, permeate through Australia. And if somebody wants to finance it or get a project moving, or say one of the big miners wants to decarbonise their Pilbara operations and stick one up there as a sort of a first example, then within a proper regulatory framework, let them do it.
Yeah, God. Anyway, it's all the fact that people that just worked at local councils make these fucking decisions just drives me nuts. Canberra, if you're listening, we're moving the fucking needle over here. We're talking about the bloody proper shit.
It's hilarious how you talk about big tech there, and they might finally be the ones to push the thing forward, given their capital and their sort of goodwill to an extent in the community. They're seen as clean and whatnot. It's amazing that just self-interest just moves things forward. Now that they want to make it happen, it could be an awesome thing, Oh,
it's got to come from a Gina or a Twiggy or something, like the people with the political influence to actually move the needle on this. And because they wank on about, it costs too much, yada yada, but it lasts for fucking 80 plus years.
Yeah.
And what Snowy Hydro was 2 billion blown out to 12 billion, and I can't imagine the energy that outputs would be even come close to a nuclear reactor, what that'd pump out.
Oh, the whole cost thing's bullshit. I mean, you look at the countries that have nuclear power, and what their cost to the consumer, which is not, as opposed to what GenCost calculates, which is the cost to the investor. The cost to consumer in those countries with nuclear power is a half to a third of what we pay here in Australia, even when it goes bad. So up in Finland, they had a big reactor they brought on recently. It was years behind schedule and billions over budget. The cost of their power to consumer there is about 24 Australian cents per kilowatt hour, versus in Adelaide where it's close to 50. The other big one came on recently was Vogel in Georgia in the US. Again, massively over budget, many delays, all of which can be avoided if you go and build the second, third and fourth ones of that. But their cost of power is about 16 cents per kilowatt hour. Again, a fraction of what we pay here. So, this cost debate is, cost to who? It comes down to the actuals versus forecasts, and the actuals suggest that this is cheap.
Yeah,
and I think the political cycle will take a while. Well, we probably get there on nuclear. I think it probably shifts over time. It will just take some time, and this is the greatest country in the world.
Go Australia!
Go Australia! We will figure it out. But at the same time, I don't think that precludes us from the way that technology is advancing overseas. I think we can use to our benefit. We can continue to, whether we're investing or not, we can continue to learn from that. And at some point when we're ready to make the call on investment, I think we will have, there's some great technologies that are evolving. And Copenhagen Atomics, they're doing that molten salt thorium type of a reactor. Again, that's a sort of new technology, and perhaps that ends up being a better solution, and we're proven right by waiting. But, those guys in particular, and there are other guys out there developing technologies, I think are starting from the right position. They're not starting from let's engineer up, right? And then I'll tell you what it costs. They're starting from I need to be more competitive. I need to be a lower cost of energy than hydrocarbons today. Start there, reverse engineer back. And they're also, doing a whole bunch of interesting things around, logistics and just working into existing logistics chains and these types of things. So I think there's a real mindset that really intelligent, much smarter guys than me are starting with, which is the right one. And then those technologies are going to be something that we can really get behind at some point.
They've gone, the country's gone all in on this fucking renewables thing, especially over east. And, I'll talk about Twiggy's influence. He's not going to push uranium because he owns Squadron. And what do? Build fuck tons of wind farms. So if you change the mandate, it does affect nothing like self-interest, eh, Sammy?
No, that's exactly right. And I mean, to sort of follow on from a point that Dan made earlier, I think the importance of the energy debate, it's sort of I don't think it's given its due weighting within Australia. And just to, I think, highlight how important it can be, I mean, there's a very robust argument that part of the reason that the recovery of the US economy post the very interest rate shock that the Fed put them through to try and keep inflation under control was because they had very cheap energy and they perform. It's like a tax cut or an interest rate cut for everybody. If your cost of your gas was $1.80 per gigajoule, everything that lower costs permeates through everything, and the economy has been much more robust as a result. Whereas over here, power costs are still going up. With the rest of the world, they're going down.
Yeah, I want the opportunity for us four to go and speak in Parliament and put our fucking point across.
Yeah, it's getting there.
Give me a voice. Give me a voice, Australia.
Should we move this conversation towards some of the battery metals? Dingo, I know you got a bit of experience in the world of lithium. It's been pretty volatile, to say the least, over the past for the past 5, 6, 7, 8, 9 years now. So how are things sitting right now? We're sort of at a low 1,000s in terms of the spod price. We saw some sort of funky things. We saw like Greenbushes pull back, even though they're you'd think one of the best players in the industry. Liontown's meant to be coming on any day now. How are things in lithium land kind of looking to you at the moment?
Yeah, I think the general space in lithium more broadly is looking pretty challenging right now. And I know we've kind of been in this sort of lull in the cycle now for maybe six months or so, and we've just kind of been bouncing along a bottom after a pretty reasonable leg down, which mind you came because prices were well above incentive for new projects for quite a while, right? And I think naturally what happened was that brought on new supply. And that's what we're still working through. And I think some of these anecdotes about Greenbushes and perhaps Wodgina Train 3 being a lot slower and, feeding in some of its sort of more stockpiled material as opposed to its real premium hard rock material is evidence of that, right? I don't think the Australian guys are really seeing a material uplift anytime soon. And the challenges, as far as I can see, are one, the amount of production that's coming out of Africa at the moment and continuing to grow. Two, the amount of production coming out of China. Now, whether that be through traditional spodumene sources or the Qinghai brine sources or the lepidolite sources, but production is materially up year on year out of China, so their self-reliance has improved. And as a function of that, I think you've seen a pretty blind, but it's there, rise in inventories again. And so I don't think any of the buyers are concerned about procuring product for the moment.
Where's most of it coming out of Africa, Dingo? I know like Alumina is going to be coming on soon.
Yep.
Where is it coming from?
Zimbabwe is a big producer.
Spod mines, are they? Or
yeah, they tend to be a bit of a mix of spodumene and petalite.
Petalite, that sounds shit.
Well,
not as good. It's not lepidolite. It's between, is it?
Well, yeah. Again, I know.
You don't want
another
ite.
one of these. Another one of
ite
these things that. Yeah, exactly. Another ite.
Yeah.
Traditionally, petalite has gone into the glass industry and has had a real purpose there, and has been the feedstock for that. My understanding is it can now go into batteries. Yeah, I don't think it's as good as spodumene in terms of how it responds in the downstream conversion, but it's still tons, right? It's still percents of lithium.
Pilbara has had a short at about 20% of its issued stock for like a long time now. Do you think that's warranted?
Well, I'm amazed by that in many regards. One, because I feel like it's actually held up pretty well. Like I feel like Pilbara's valuation has actually held up.
Aussie super.
So to see guys piling into the same trade when there's that much short in it, I find that a bit odd. Just as a thinking about, would I take a short in Pilbara, which I'm not short Pilbara, by the way.
Well, we've never, ever since we started that show, we've, funnily enough, never interviewed a fund in Australia that shorts. It's just a phenomenal thing.
That's those guys down the
we're
street.
all
Yeah, it's always someone else.
I want to see Dale just use some of that $2 billion in cash and just announce a buyback
Just
and scare the
squeeze the
shit out of
motherfuckers.
everyone. And then I reckon in one day the thing will jump.
What's like? I don't know if you've talked to anyone that shorts or anything, but what are the long short combos in lithium at the moment? Are there some? Linetown, because Linetown's crept up to near 10% as well. But Jesus Christ,
Yeah.
you'd have to have some minerals on you to go against the M&A risk there. But I can't see much M&A going on until they bloody ramp up and potentially fuck up if it happens. I can't, if it's a smooth ramp up, that's a gold medal in my opinion. But Jesus Christ, something's going to happen.
I might answer it like this, just from how we think about our investment philosophy more broadly, right? So we take a view on the commodity, and we use where the commodity's trading relative to the cost curve really to define that. And in something like lithium, you're starting to trade into the cost curve, okay? So that's starting to get more interesting. Like, that's somewhere where I want to be, because I think that there's going to be hardship out there, and valuations are going to become attractive, and these things are cycles. So yes, I think lithium's in a tough part of its cycle. Does it drift sideways or leg down? Not really high conviction either way, but I just think that will persist for a little while, and then it will improve. So then when we go to the equities, we go, well, what am I paying in terms of an implied lithium price today to own this? And where does that sit relative to the cost curve, and where does that sit relative to the spot price? And this is the challenge I'm having or see at the moment, say, in maybe some of the producers out there. They're still pricing in reasonably healthy levels of lithium. So if you believe that the market and the cycle is going to recover soon, then that's okay. But if you think that there's going to be a bit of an extended period of weakness, then perhaps you feel like that can be a bit too rich at times. So that's kind of how we think about it. If we come across names where the implied price I'm paying today, say, is $600 a tonne spodumene, well, then that's super attractive. Maybe I'm happy to make that investment today and go long. So yeah, I know that's not what you're asking. You're asking for a long short
Very
trade,
diplomatic.
but
Not even close. But yeah, I learn a lot out of it. But Sammy, are you dabbling in lithium, or you
Nah, mate,
treading wary?
I'm right alongside Dan on this one. The suppliers all around us. I mean, the only other thing to add to what Dan's already said is that this cycle is a bit different to the one in 2018 in that when the price started rolling over, like, nobody thought EVs are going to sort of flit out of existence. Like, they're with us for forever now. So miners kept on investing through the cycle. Pilbara kept on expanding. You had all these Chinese money going to these African mines expanding. I mean, MinRes has got plenty of spare capacity through Wodgina Train 3 if they decide to turn it on. So that's different this time around. So that means because that the industry invested through the cycle, now that we're sort of searching for the other side of it, well, all that supply is sort of ready at hand. So you don't have the same conditions to go create this massive whopping deficit and force prices higher. So I reckon it's going to be a while.
It's like lithium's like gold now. It's fucking everywhere. There's even more versions of it than gold. And when you've got a shitload of something that is everywhere, because they've bought it on. It's all come on now, so that's the risk.
for sure. And we're in the early, this is sort of cycle number 3 for lithium. It's still kind of in its infancy. I mean, you can't deny that it has one of the most attractive growth profiles if you take a longer term view. There's not many commodities like that. So I think you're going to see more of this technological advancement and ability to continue to extract lithium from more and more things, the more investment we put into it. The Chinese have been excellent at this, and 2 cycles in a row have caught everybody off guard. Right? Last cycle it was Qinghai brine. Oh my God, how did that get to 100,000 tonnes all of a sudden? And this time it's been in these micaceous lithiums, and they're going to keep doing it. They're so far ahead of the curve. We need to try and somehow start matching it.
Development, you got to be friendly. Gotta be friendly with them, I reckon.
Yeah.
Develop a relationship. Imagine the intel if we got some Chinese mates over there on the blower.
Mate, would you a site visit up there, I reckon?
Yeah, just
Absolutely.
bloody, that'd be good word on the decline.
I want to see their industrial parks up
They'd
there.
probably
the battery.
stitch us up with the translation. But bloody, yeah.
I might sub out now.
Oh, JD, bring in the impact player. Yeah, I'd love one, bruz. I could so easily, if I started a fund over here, I'll be like, look, hey, what are you buying today? Yeah, I'll buy a bit too. I'll drive it up. I'll just follow you bastards. And it's good for you because I'll buy it, then you can sell it. And bloody, I'm winning, you're winning.
What
hopefully.
footy team do you go for, Sammy?
I'm a big Chardonnay Eagles supporter at best.
So big disagreement.
Right, sorry to break for a special service announcement. Trav an issue.
Matty, I'm going fucking crazy, mate. Like, I am looking at these expiration announcements and people know how to get our attention. You say that K-Drill is drilling your fucking holes and no one fucking does it.
Why?
Exactly.
Why?
Exactly.
I wanted the fucking logo on the drill string. And it's
Ryan Smash!
can you comparing your reaction to this, Trav, is similar to like someone dumping 75% of their stock or dumping all their stock and then leaving? Like, is this where not announcing that K-Drill is your driller has led you to?
I'm fucking
Like, is it comparable?
You know what I think of? Trav, you said it so eloquently a few months back. Somebody wanted to buy, I think it was 29 metals or something, and you said, do you hate money? Now, there is free money up for grabs here. All you need to do is call K-Drill, get Ryan O'Sullivan out there punching in some holes for you, RC, Diamond, they'll do anything.
One or two
free
rig program,
money.
mate. One or two rig programs,
Give
JD.
yourself a free bonus.
Yeah. Get K-Drill on board. Right, sorry to cut you off there, Sammy and Dingo. Let's get back into it. I go with you, Dingo.
I'm Essendon.
Oh, right.
Yeah.
Speaking of PG,
Welcome, Trav, to your own show.
Thanks, mate. Speaking of PGMs, whenever there's like some random company out there that happens to have like be a bit obscure and they operate in South Africa or something like that, and they're just like not an institutional stock, but they actually produce and make money, I call Dingo because I know he fucking knows about it.
Well, mate, we're at a dinner well before the bloody Groot Island disaster. Was Dingo plugging the manganese thematic to us. So
Yeah, you
that's what I
predicted
like
Groot
about you. That's what I like about the Dingo. He's telling me shit before it happens.
Yeah.
What
Yeah.
sparked the interest there originally, Dingo? Well, there must have been some sort of global supply-demand dynamic that
Good.
pricked your little ears up.
No, good question. In this one, actually, to be honest, it was more of a valuation call on Jupiter, which was the name that we discussed at the time, and is the name that's performed the best since the accident at up there in the Northern Territory. To be fair, I didn't see that coming. I wasn't the one advising them to keep a ship strapped to a to a port when there's a cyclone. So
And it might have even been an accretive decision for them because like
the irony on that is so true. So yeah, I mean, look, for Jupiter at the time,
Conspiracy theory. I like it.
Yeah. It's and that's the way that we invest, right? That was a name where they were doing a super material part of global supply, I think sort of 3%, bottom of the cost curve, and they were paying a really healthy yield. So when nobody wanted to own it because manganese was, in the toilet and the prices sort of trading back towards the cost curve, we were happy to sort of own it at that point, and a bit of luck helps, to be honest.
So when the news come out that wharf just got taken out, like, look, you don't want to jump up for joy on a bit of a natural disaster, but geez, it would have been hard not to.
Well, yeah, we were pretty happy with the response.
Nobody died, did they?
Yeah.
No.
hope not.
It's all in good fun.
Every cloud's got a silver lining somewhere.
Oh, isn't it bloody how funny, interesting that so many people can make money off a storm. Yeah.
A lot of miners lose money from rainfall. It always comes out the week before quarterly season. Do you notice that?
mate,
Lots of
mate,
rainfall guidance.
Mate, stay. Bloody, this ain't investment advice, but tell you what, stay away from gold going into Christmas. Fucking, 'cause the bloody storms. I reckon weather. I'm into weather these days.
predicting it.
And June tax losses. Fucking, that's what the market
Is that weather or climate?
Fucking could be weather. Same thing, is it? It's just all energy.
Facetious question.
Cause yeah, I mean, you were super attracted to Jupiter, pretty unknown stock before it became kind of a bit of a meme stock in some ways now. What's kind of like in that same ballpark, Dingo, that really tickles your fancy, and it's a bit of an unloved stock, might even have like a healthy kind of dividend yield, but you know, most people just aren't comfortable owning it?
Yeah, well, good question. And sort of switching commodities, I suppose, Nickel Industries has represented one very similar.
Yeah.
And again,
Totally.
some very similar attributes, if you like. So growing production, very material part of the market today. I mean, they're doing 100,000 tonnes contained nickel production. So I think they are almost the largest pure play nickel producer globally that you can get exposure to. And they're at first quartile cost curve. So, you know, they came out at, I think, in the December quarter, and they announced a buyback and a dividend, which equated to about a 5 or 6% dividend yield, whilst everybody else was talking about turning off production. And I think that goes to the point about sort of trying to find quality at the right part of the cycle. So that would be one that is similar.
But is that viewed as a yield stock? Because if Nickel Industries is going well, that means Indonesian nickel is going well, which means the price of nickel will be capped, like stable.
Yeah.
If that is happening, so you can't really see nickel spiking to bloody $10 or $11 a pound.
No.
You never know. You couldn't have predicted Jupiter, you know,
Could,
manganese. You
so there'd have to be a
supply
serious
shocks can happen. Yeah,
a serious production shock over there at somewhere else in Indonesia to really move the needle on the nickel price. I suppose the Russian LME side of things has popped it back up over $9 a pound before, but it's like, are you looking at that investment as like, you know, that bottom of the cost quartile, huge, long life, stable yield?
Yeah, no, good question. And look, it's not really a yield play. I mean, there's a healthy yield there to support the thesis there at certain prices, I suppose. In terms of our views on nickel more broadly, we sort of view nickel as a bit of a range trade. So we think that, you know, at $9-10 a pound, which is kind of traded sort of back up to, there is a part of the market now that will respond to that and will bring supply on. And so we don't get too evangelical about that. And again, going back to how you think about equities, well, come back to what do you think's priced into the commodity today. And if you think that's too high and it's going lower, then you probably don't want to own it. And if you think that what's priced in is too low and the commodity's going higher, then great, you can own it. So yeah, for nickel, I think we sort of have a view that it probably trades in a $6 to $9, $10 a pound range.
Okay, so buy at $6, sell at $9. And just keep doing that, right? Sorted. I'll get onto that.
And Sammy, you're, I mean, like it's one thing to own the producers who are in Q1 of the cost curve, but it's hard to do, and sometimes you got to pay top dollar for that. It's a lot more fun to buy producers in Q4 of the cost curve, and then you know you have a commodity spike, and those things just fucking rip. Are you more attracted to those opportunities given like broad ranging commodity tailwinds at the moment?
Yeah, I mean, you'd want to see also, like coupled with that scenario, as a path to those costs coming down. Like I suppose that, I mean, Orabanda would fall into that basket.
Oh, yeah, I nearly interjected before you. But
Metro as well, right?
Yeah, Metro's. I mean, Metro's this is quite a unique example where you've got production increasing by 50% year on year, and this is a bulk commodity play, so unit costs will come down at the same time as the commodity price itself has gone up by about 30-40% over the last 18 months. So that combination of should lead to a decent amount of margin expansion, and might end up in the dividend paying bracket once they pay off a bit more debt.
Yeah.
What do you think about the Australian, probably more even the West Australian gold sector at the moment, Sammy? Like, it seems like gold prices have gone up. Doesn't sound like inflation's come down at all. Like all the jumbo operators I talk to are still getting paid fuckloads. So like the cost to operate. But we're not really, Orabanda's, they raise bucks to expand for Sand King.
Yeah.
Yeah, not really seeing much else. Sort of Spartan sort of drifting towards maybe getting some bloody production happening sometime. But do you think there's there's so much stuff that could come, old operations that could come online, but it doesn't seem to have happened yet.
And did you guys tip into Osgold as well?
Nah, I didn't play that one.
Yeah.
Osgold looks cheap.
Yeah.
Yeah,
Yeah.
yeah. So what's your take on it? Give us the bloody gold landscape.
Well, for starters, I don't think anyone's really paying for, what are we at, $3,300 Australian dollars an ounce at the moment. I did my multiples the other day, and you look down the spectrum of the industry, and the EV to EBITDA for 2025 is 2.5, maybe 3 times for some of the more expensive ones. Like it is a really cheap sector, but you go down there and you think, is that cheap or cheap for a reason? There's a few hairs around, but I suppose the biggest challenge for the industry and that they've got being awarded a greater multiple by the market, for the most part, it's just the growth and mine life. This company's been quite acquisitive and raising money and trying to take each other over just to fill out that mine life. And then, every now and again, there's a bit of a gap in a mining plan where they've sort of, couldn't find the right thing in time. And so there's a dip in production that they've got to get through, which the market doesn't like. But, that's the challenge. And for the new projects, you need a team that can build these things. So, and there's not many of those around. So, I'll credit to Emerald, credit to Capricorn, credit to Bellevue, credit to West African Resources over in Burkina Faso. But other than that, there's been some carnage around the place. So, for me, I'd almost place a greater value on the team itself, ahead of the looking at the asset, because if you don't have the right team in place, you can just stuff these things up.
Orobanda's a bloody. You're the main man to talk to about this, and do you see them? Just creating their, because they've got a fucking big exploration
Package
at
Huge.
River, not Riverina, at Davyhurst. Well, it's fucking huge, and they got the lithium rights with Wesies as well, free carried, and do you see them just really creating their own identity at that Davyhurst operation, or are they going to be looking a bit bigger?
They're going to be going a bit bigger in time, I think. So first things first, they've got to fill that Davyhurst mill, and to do that, they need 2 undergrounds. So Riverina, tick. Sand King will be the next one, tick. After that, they turn their head to the exploration, and around that ground, there is a lot of laterite mineralisation, like 1 gram per tonne type stuff. But
It's the Walter Williams formation.
I think you're right there, mate.
Don't worry about me, mate.
But that's a bulk tonnage play, and that probably requires a second mill. And that's where this thing, could really turn into quite a big company. But even at if they can get to sort of 130, 140,000 ounces per annum in a year and a half or so, the market caps being awarded for that levels of production, like Capricorn, like Emerald, etc., is well and above where they are at the moment. So they have to deliver for sure, but it's still interesting.
There's a lot of in the producing space, a lot of companies that feel like they're in a very acquisitive mode at the moment, or that they could be pretty damn acquisitive. Like if you think of Regis, there's actually uncertainty if McPhillamys is their growth pathway now. If you
Looks pretty certain it won't be.
that's a good point. I mean, we can move it so then where's Gold Road? I mean, they were rumoured to be pretty acquisitive before. That might not have changed, or it might have. I don't know.
West Gold, they want to grow.
West Gold, Remelius, they clearly want to grow. So there's a lot of those sort of, similar capped gold producers, decent production profile of their own, but really hungry for growth in some way, shape or form. Do you think the natural outcome of that is that they'll bid for the decent undeveloped projects that have just been around forever but have never been bought before? Or where do they go? Are they going to merge with each other instead?
It's hard to say. I mean, I'm sure that they've got M&A teams that go assessing all of these options. I mean, you sort of, you want some synergies between companies rather than just getting bigger for bigger's sake. And so every now and again, you might have a natural sort of fit between two companies. I mean, Genesis and St Barbara would have been a good example of that. But otherwise, when you're in the business of depleting assets, your mine life is always front of mind, and they're going to have to do. I mean, you just get forced into doing something eventually. So yeah, I mean, if I remember like when Independence had about 4 years left at Long nickel mine, and they're staring at the end of the mine life here. Well, they had to buy Sirius,
Paid
and
top dollar,
they did pay top dollar,
but it gave them optionality, right?
It did, but if they hadn't have bought that, then they would have been screwed. They had declining assets, and their script wouldn't have been worth anywhere near as much. I reckon.
Did they have Trop at that point?
Yes, they did.
Yeah.
But I'm not sure if it was producing or not. I think it was.
Yeah.
It'd be nice to see some M&A that actually has proper synergies, location-wise, because the shit we're seeing at the moment ain't. Like Karora Westgold, we do underground, we'll come down to you.
Yeah.
Maybe there might be synergies if they bloody took Pantoro or something as well, but there's not really. Silver Lake Red 5, I don't know. The only synergy
Balance sheet
we
synergy.
got heaps of cash. You need cash synergy.
Welcome to gold, hey?
Yeah. So like Westgold Ramilius, synergies, logistics, staff in the one area. That's a synergy. But
the question is, do your synergies offset, the premium you had to pay to get the deal done and all that sort of stuff?
Look at bloody Saracen Northern Star, at
Totally.
$16 or whatever. Only just getting back up there now after all these years. Just they did give out some divvies, but it's not like you fucking doubled your money. That's for sure.
Cost crept up pretty damn quickly at Northern Star, didn't it? What's your take on this, Dingo?
Yeah, I mean, it's a great question, and it's one that, it's probably the most hotly
I don't know. Was there a question? Did I ask a question? I was just talking to myself. Sorry to interrupt your interview, boys.
I liked your sentiment, because what you were really trying to say was that more companies should think about how do they drive the best value outcomes for their shareholders. And
that's what I meant.
Exactly. And that is ultimately, what you should be doing through M&A. If you're doing M&A for the sake of M&A just to get bigger, then it rarely necessarily, I think, pays off in the longer term. If you're buying production because, you're buying at the right part of the cycle and you think commodity prices are going to go up, then, I can sort of justify that.
Well, there's a healthy balance of M&A. We just, whether it's dumb or not, we need a good amount to keep the show going.
Yeah,
because that's
absolutely.
we
Mate,
love it.
If we started the podcast in COVID, fuck, mate, we'd have nothing to talk about.
What do you think? Northern Star is an interesting. I'm fascinated by Northern Star. The big bloody growth project. KCGM going to 27 million tonne. They've got, Carasoo Dam's in play for Ramelius. Would be wanting that, but they've still got a bit of a honey period. Jundee's grades are declining a bit, so that hasn't really been performing. Thunderbox that mill expansion hasn't really gone well, I don't think. It's like they haven't really hit the mark consistently there. And good old Pogo's just Pogo. Tough going there. But everyone talks about Northern Star, they'll be looking at fucking De Grey or bloody Averon and all this shit. But they look very focused on the KCGM thing. But do you think Northern Star would be applicable to like an Agnico that wants to get into Australia? Would Northern Star be, or do they just not have the quality of assets that a big major will be looking for?
Do you have a strong view on this?
Come on, boys.
Nah,
Give
mate,
me something.
I'll pass that one on to you, Dan.
Oh, good question, mate. I don't have a strong view either. I think it's one of the most robust asset bases here in Australia, and if you do want access into Australia of scale, I mean, it's going to be hard to go past Northern Star. It's got such enormous leverage to the commodity price through its production growth, so through its organic capital cycle that it's going through. So, I can see many arguments for why a big entrant coming into Australia may want to have a look at it. I can see many arguments for why Northern Star might want to continue to evolve its business in Western Australia and remain the champion of Western Australia.
How would they do that, do you think?
Well, at the end of the day, they would. I'm sure they have a view and have looked at absolutely everything. And what I will,
But it
I'll
would
give-
need scale because, like, say Spartan, for instance, it
Yeah.
just probably wouldn't move the needle.
Can you buy
for 'em
Goldfields
enough.
Australia assets, for example? Things like that really move the dial, you know?
Oh yeah, because they're fucking got some bloody grade about them.
Yes.
yeah.
Yeah.
I mean, there are assets in
That's
Newmont.
good one travel like that.
No worries, mate.
There are assets here that Newmont want to get rid of that,
Yeah.
you know, that they could, that I'm sure they're looking at. Goldfields portfolio, absolutely. Hey,
Can
and-
you merge with Evolution? Fuck, that'd be something. Get copper. You raise your eyebrows like you know something.
Yeah, well, tell Telfer and that whole Telfer package is obviously the interesting one. And as I've repeated, I'm not. If someone give me some bloody info on it, like the exploration up there, like what you could possibly turn Telfer into. I know it's constrained by this, 13 million ton mill on one train, 26 on two. So like trying to run that at a lower thing, but. Yeah, getting that copper, like I'm sure that these gold miners that have to be looking at operations like that for the copper, because I bloody found out, copper, like so Telfer produces a shit copper con, it's like 14% copper grade, whereas like Katie is like 24. But if you're producing a low grade copper con, if you've got gold in it, smelters will take it every time. So having copper with that gold byproduct means a fucking lot. So,
Yeah, I mean, the other one that I think is interesting is De Grey. Like, for that to get to where it has and nobody's lobbed a bit on the
must
table
be
yet.
for a reason, but
Well, that's what I'm thinking, It's going to be fascinating to see how that one plays out because management right from the beginning is like, no, we're not putting this asset up for sale. We want to take this thing into production. We've done all the studies and it's the best outcome for shareholders is to go into production. So,
I reckon
Really?
if it was 0.3 grams higher, like it's, what is it, 1.1, 1.2 refractory? Like,
Yeah.
if you're thinking, fuck, if it's a 1 gram free milling, she has to be 1.5 gram refractory. Like, it's just as a bloody thumbsuck. But it has got the scale, but, 800,000 ton pox train and the risk of frigging capital blowout on installing that in the bloody, essentially butt fuck nowhere, isn't it?
well, yeah, for a non-producer as well. It's not like you can go and lean on your other gold
Yeah.
mines to finance you through
Imagine
if
the
you need a bit
fucking
more.
water you need for it.
I think they have to build it now too, because it's like if you think of the dynamics of an acquirer, they've got their IRR is like they factor in the acquisition price plus the capex to go, and it's just it's
But
a much,
they haven't had
much tougher
drama
equation.
raising the equity. Like, they've raised a fuckload of equity for it.
A lot of equity,
And the people have bloody bought it, so they've got the ability to raise a lot more.
yeah, it's the beauty of being a giant undeveloped gold project, and there's not many of them going around. Even though the economics still might be somewhat underwhelming when you kind of compare it to smaller scale stuff that's a lot higher grade. But yeah,
Fucking bloody, you boys should fucking bloody major shareholder it. You could bloody develop De Grey.
Mate, well, our view of these things is that always horses for courses. No.
But how do you? But in terms of either participating in a future equity raise for De Grey or even buying it now, how do you look at it where it's sitting? Like, it's at that stage of uncertainty. Like, I suppose there's a bit of M&A bloody potential, but how do you size it up? Is it going up? Is it going down?
At the end of the day, I think it is a quality asset in terms of its scale and jurisdiction, and what else you can probably find there going forward as well. So I think any number of people have run the rule over it and are probably ready to go. If somebody is to move in and bid De Grey, then I'm sure that's probably become a competitive process now. Hopefully the board thinks about the best way to extract value for shareholders from here. But I don't think that De Grey, it's just a value question again. What am I paying for it? And I think at these levels it looks kind of interesting.
Yeah, right. Yeah. Sammy, bloody, you don't care about it?
Oh, we don't own it. I mean, as we mentioned, the commissioning or development capex risk. I mean, you touched on as they go through that process. I mean, you want a bid in the price to acknowledge that, I suppose. But I mean, we'll see how they get through production and whether or not they need to do the emergency equity raises. so many companies have done before them.
Yeah.
Yeah.
Right. What else is giving you a stiffy in the market, boys? What's something interesting out there? Sammy, you'd have something fucking quirky going on.
I'm pretty getting pretty excited about East Coast gas going through the winter. I know I've talked about this before, but like every time the wind stops blowing on the East Coast now, the gas price spikes like 30-40%.
Massive.
It's not normal for that to happen. Like utility gas pricing should be like watching paint dry. It's just meant to be flat, and that's a good thing for consumers because they don't want prices going up and down. This is a real worry. And so at the moment, what I'm watching is the Iona gas storage facility and the amount of gas that's got in it, because that's what gets Victoria through the winter. Well, not just Victoria, it's New South Wales, South Australia and Tasmania as well. At current draw rates, I looked the other day, it had about 90 days of it in it, and that's assuming you can pull it all out. But it was windy, so they were only drawing about 200 terajoules a day out of that thing. When it's calm, they draw a lot harder on that. And so, if we have a calm, cold winter, then Iona's, could be getting low. And when that starts to happen, people are going to get really titchy about gas prices on the East Coast. And we might end up with government intervention or something at all. But and the only solution there, I know we had, I think there was a Beach brought on a new well at Enterprise just the other day. I think that's about 30 or 40 terajoules a day or something. It's not much.
I saw POSCO, they're tipping another 316 million into their JV with Gina and Cenex to triple production by 2026 from Cenex.
But then that's up in Queensland.
Exactly.
Yeah, so you've got that gas pipeline coming down. It's got max capacity of about 410 terajoules. So you need the gas like next to the demand. It's having it all up in Queensland is great to a point, but you need to get more gas down in southeastern Australia, and that's where Twiggy's LNG import terminal up at Port Kembla is going to come into it. Like, if we end up importing gas into southeast Australia in this country, it's an absolute national embarrassment that that government policy is so bad that we end up importing higher emission and higher cost gas. It'd be an absolute disgrace, but it looks unavoidable now. Because you can't go and replace a facility like Longford, which takes all the gas out of the Bass Strait. That's Exxon and Woodside's big play. That thing was pumping out 1,000 terajoules a day every winter for the last 20 years or something like that. It can only do 700 now because they've shut down a train. And in 2 years' time, it's only going to be doing sort of 500. It's coming down fast. So the window to fix this has closed. The horse has bolted. But then it's not just an energy thing. Like, as I mentioned before, this has got implications for, interest rates, just manufacturing in Australia. I was told the other day that in Victoria alone, there's just over 200,000 people involved in manufacturing in that state. And if their gas price goes to $18-19, their jobs are at risk. You had Mars the other day in the paper saying that, this is the highest cost of food processing facility that we've got in the country. You need to do something about the gas price. We
lose our competitiveness.
Yeah, exactly. There's real people and real jobs that probably don't know nothing about commodities that are going to be knocked about by this. So it's not a happy story, but at least we can say we're investing in supply.
What's the investment play?
Cooper, I think, is the main one.
Yeah.
Cooper.
But then there's a couple of others. Again, Cooper's good because it's down in Victoria, like where you need the gas.
The knock on Cooper has always been about their rehab obligations and balance sheet, right?
Yeah.
And where's that at now? Admittedly, I haven't done a deep dive on Cooper in a long time.
They've
Don't need to, just ask him.
They've actually finished it. Okay. So the abandonment's done. The rig's been let go.
Yeah.
So that they have got a bit of debt sitting on their balance sheet as a result of that. But at least that key variable is gone, and now they can start to talk about growth and other bits and pieces. So, we'd like to see them pay down a bit of debt before they, start throwing more money around on growth. But
do you think they're a target?
I think so.
Yeah.
One of the at that APIA conference that was on in Perth a couple of weeks ago, one of the comments that was bandied around regularly is that due to the uncertainty of navigating regulation for oil and gas assets in this country, none of the majors are interested in large scale capex. They just won't do it. It's too much risk to start $1 billion construction project and then get stopped halfway through because somebody appeals the permit which you've got. So until that changes, there's no large-scale growth, but that does mean that anybody who is fully permitted, they become more attractive. So I think it's a fair thing to say.
Oh, good to see you done your homework on that, Sammy. You're not just punting up there.
You'd have done your homework on the East Coast gas as well, I'm sure, Dingo.
I think it's a very. I agree with Sammy in that the investment thematic there is very interesting, and there are certainly limited ways to play it. So
who are the others?
Oh, there's a couple up in Queensland where the gas is. So there's Comet
Ridge
sitting around up there. There's a tiny little company called State Gas, which they're looking at a bit of a niche strategy of supplying what they're calling high density natural gas to truck fleets in the coalfields of Queensland to facilitate them down their sort of emission reduction pathway, which they have to do because it's legislated. So it's an interesting, but that's tiny. There's sort of 16, 17 mil market cap or something like that.
Yeah, right.
Yeah.
Dingo, I'm going to take a punt here. Are you looking at Encounter?
Encounter Resources.
Yeah.
I've looked at it. Yeah.
Yeah, right.
Yeah.
What's your little Westerunter take? Because she's missed the boat on WA1, or did ya? What's your take of that region?
The Westerunter region. I mean, what WA1 has achieved is phenomenal, and hats off to guys that have done well there. That's been a great find, and the guys that running Encounter, I mean, they're onto some interesting niobium up there as well. It's more in the hard rock as opposed in the fresh, as opposed to WA1, which is largely in the oxide, and which there are analogues for both globally. Westerunter broadly as a region, not somewhere hugely focused on historically. There's still some logistical challenges and stuff that I think going to need to be sorted. You're out in the middle of
Fucking no. Arsehole of Australia, I call it. Yeah.
So mate. Not if you're happy to riddle me with one, I'll take you right down to the South Australia, the most southern point in Australia, Tasmania, if you like.
What's going on in Tassie? Oh, there's going to be
home of Hunter, and
there's going to be ding here. I reckon.
You did a few site visits recently, didn't you?
We did, and a name that we think is particularly interesting, and Trav, you love this space in tin, is Stellar Resources.
Who uses substantial in?
We are substantial, so that's all
bloody ding.
very public.
That's like one of those that's like the Big Ben. That's a clock. No, what's that big fucking bell? Well, one of them things.
Yeah, one of those big ones.
Yeah, where they put the bat signal.
Yeah.
Like, yeah.
And look, we're not the only ones that are substantial there anymore either. So in
Regal,
the most
Parlour.
Regal, yep, and have just come in, and so have the guys at Paradise. So
Paradise, not far, sorry.
Yep.
Yeah.
So and the last capital raise, those guys came in and took a big chunk. So the vehicle's very well capitalised now, super solid institutional register. But the most attractive thing for us going down there, I suppose, is the quality of the asset. And again, hunting around in a commodity that perhaps is a little bit unloved or was a bit unloved. It's a bit more topical now. This is arguably the most advanced development asset, particularly in the Western world, and is, third highest grade undeveloped project, I think, globally in the hard rock. So it's one of the only tin projects you'll find running at 1%.
Bloody word on the decline. The Met mightn't be up to scratch.
Oh, I don't know where you're
Is
getting
it?
your intel from.
Is there any proof?
Don't know where you're getting your intel
on
from.
The metallurgy there yet?
I think there's been a lot of work done historically around the Met, and the guys that are coming in now, the new management team, Simon and his team, are redoing that. So I think, you'll get validation there in time. It's predominantly a cassiterite, which is maybe getting a bit into the weeds, but that's the Met that you want.
Ah, righto.
And
Someone told me at a pub, so. Yeah.
Well, you might have to go back and get them to do their homework. But, super attractive thing about that asset, I think, is that it's quite well advanced historically. Like, there's actually been work done on it, and it's not well known in the market. So, it's still at a very attractive valuation as far as our view goes. And your leverage here into exploration upside is enormous. So this hasn't had any good, proper systematic exploration done on it a long time. They're going to run some EM shortly. And if you look at Renison, that recent discovery they made there, Ringrose, that was actually an EM discovery. So miraculously, somehow, it hasn't been, you haven't seen a lot of electromagnetics run over this region. And so there's heaps of upside there, as well as, through the drilling that they'll do. And from an optionality perspective, which is something that we always look for, yes, I think there's a viable pathway to go and build this project and do it alone. But there are also various, if that makes the most sense in time, sure. But it's early in the process of needing to work that out.
It's a region-long infrastructure too,
It's
right?
region-long infrastructure, absolutely. And I think most people have a misconception that Tasmania is anti-mining and completely against it, and that's just incorrect. In this district in Western Tasmania, this is a 100-year-old.
Fucking legends have come
Absolutely.
out of Tasmanian mining between Rosebery, Mount Lyell, bloody.
Spot on. That's exactly the region that we're in here. Rosebery,
Beaconsfield,
Renison.
they were fucking mining towns.
They are, and they still are. They still are
Henty.
very much a district down there that supports, and their whole livelihood is built off mining. So that's the Kambalda of Tasmania, if you like, Matty, is the way I like to think about it. And so, what have you got there? You've got the biggest Western world producer of tin anywhere in Renison is 15 kilometres down the road. So, there's synergies there. If you talk about M&A, absolutely, there are synergies. Super interestingly, you've got the Avebury mill, which is a brand new spanking flotation mill just down the road. Again, 15 kilometres in the other direction. And that was an underground nickel mine going 0.9% and arguably had more arsenic than nickel in it. I don't think that's going to come back. And again, going back to a view on the nickel market from earlier, that's the type of asset that just simply doesn't work. So that's gone to administration. That's ended up in the hands of the senior debt holder, who is a PE group based out of New York. Yes.
Yeah.
And they're going to need a solution for that. So the nickel underground's not going to be a solution for that. But there's a whole town in Zeehan here that was rebuilt off Avebury coming back to life. They're going to have their licenses which come due. They're going to be able to demonstrate to the government some sort of pathway to production, and very neatly, I think, Stella arguably could provide that for them. So, long way to go on all of these things, but, as Trav rightly pointed out, long infrastructure in this district, lots of optionality, and a quality project. So that's what we like about it.
Buck, I reckon if you're going to do a stock pitch, you got to accompany it with why a company's real shit that you're shorting, just to allow it on the show. New rule.
I'm very happy I've got no shorts.
Fuck, I forgot yous have probably got shit to do. I could talk shit with yous for ages, but
Is there a region-long infrastructure you really like at the moment, Sammy? That's
Probably not a region, but the infrastructure point, I think, has broader implications, and certainly, that's why Spartan initially looked so good, is because they had a $200 million mill there, probably cost $300 million to build it today, and when they did the recapitalisation range, I think the market cap was like 90 million or something. It was nothing. Yeah. So if you can pick up an access to a mill cheap, that's it's worth more than its weight in gold. But more broadly to that, and then to tie back into some other some topics we've touched on, like that infrastructure challenge gets greater and greater as you move your way up the volume or the tonnage spectrum of your commodities. So you think when EVs first kicked off, cobalt was the first one to run. It was a 80,000 tonne per annum market, ran to 120, supply response. Price came back down. Then went to lithium, was a 300,000 tonne per annum market. It's now about 1 million down. To be fair, thereabouts. Right, price ran, took a bit longer. Eventually, had the supply response rolled over. Move on to graphite, was a non-starter because plenty of synthetic graphite production out of China. But now you're getting up into and this is all sort of EV driven. Getting up into things like copper, which is starting to feel it. I mean, that's a 26 million tonne per annum industry. You compare that to lithium, where you can say, well, look, MinRes has got Wodgina Train 3 ready to go. That's about 400,000 tonnes, I think, that it could knock out if it gets up and running. which you work that through is about 50, 60,000 tonnes of LCE or lithium carbonate equivalent, which is about roughly 5% of global supply. Now you compare that to copper, there is no mine that's 5% of global supply. I think Escondida is the biggest one, which is 3%. So as we move up into these larger commodities and start to have to worry about a supply response, things start to get a little bit more interesting, and that infrastructure challenge becomes harder and harder, particularly for things like bauxite, because you got to go build a port. You can't knock 7 million tonnes out, via trucks. Although Atlas was doing it for a while, but you still needed port access at Salt Creek there. But that's where Metro is at the moment. But those larger commodities, as the whatever the demand's doing catches up, is the supply response gets harder and harder.
Yeah. What about rare earths?
Well, actually, it's funny you're talking about tin. I was looking at some stuff on Myanmar the other day, and what an absolute shit show that country is now. The civil war. They've got a civil. One of the resistance groups there is called the Karens. I shit you not. It was on a map. They're down in the south.
Oh, no wonder they're fucking arguing.
Yeah, so you got the military junta in the south, and then all these sort of disparate sort of ethnic groups all fighting up in the north. But I think they're a decent sized tin producer as well.
Mate, and fucking massive meth export going on in that area too.
Really?
I watched this documentary.
You were talking about the glass industry before.
Yeah, mate, fucking heaps of the GDP's meth.
Wow.
There you go.
Yeah.
Narco state.
Yeah. So I think they used to knock out a bit of tin. They used to knock out a bit of rare earths as well. But big question marks on what's coming out of that country going forward. Certainly, I think that's caused China to have a bit more of a look around for what's happening going on in the rare earth space. But yeah, I think the number of these projects or deposits which are being found in Brazil. Suggest that's where the supply response is probably going to come from. And allegedly it's not producing yet, but allegedly it's going to be low cost. But that's probably where we'd be looking.
There's a bit going on there at the moment. Did you tip into the raise today?
Yeah, had a dabble. We've been there since IPO, but have a few more.
There you go. Bloody beautiful, boys. Fucking thanks, JD, for the first half. Bloody the impact player for the second half. Boys, thanks very much. Fucking that was bloody good fun.
Go Australia.
Go Australia.
Best country in the world.
So we got told about was it Charlie?
There's a newsletter that used to sign off.
Oh yeah,
Go
Charlie
Australia.
Aiken.
Charlie Aiken, they always sign off. Go Australia.
Yeah,
we're bringing it back.
Oh, that was peak bull market, so 2009, 2010.
Mate, everyone just having a crack trying to put food on the table,
Exactly.
Hopes and dreams in the Sydney sell side.
Stronger for longer.
Righto.
Until it wasn't.
Good on you, lads. I can let you get back to your life.
Thanks very much, fellas.
So good to pop your cherry for you, Dingo.
Thanks, mate. Thanks for going softly.
Hooteroo.
Righto, that was bloody good. Good to pop Dingo's cherry. What a fucking GC. He's bloody
Great fella.
He's clued on him. I think, what would you say? I'd say if you're talking a Land Cruiser, Dingo is the V8 and Rusty is the chassis. Dingo's the engine in Nero.
That's exactly what I was thinking, Matty.
He's under the hood and you can't see him. Rusty's in the driver's seat.
Mate, I just want to get a photo frame of Dingo drinking a can of Dingo in Money Mine HQ.
I know, I like it.
It's good.
No, it's fucking good. I love it. Righto, thanks all the partners. Fuck, we've been filming all day.
Right, we're going the other order. We got K-Drill, Brooks Airways, WA Waterbores, CRE Insurance, Silverstone, DSI Underground, GetWet Solutions, VRIFY, and use Spark while you're at it.
Yeah, get on Spark.
Hooteroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.